Cryptotrader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.
Welcome to Cryptotrader, the world's first cryptocurrency investment show. I'm Perry Ann Boring, and I'm coming to you from New York City, where we're attending the Consensus Invest conference. Join me for the next 30 minutes for exclusive interviews with the world's leading innovators and operators in the blockchain space, as well as insights into investment trends for 2018 and beyond.
I was so excited when I saw Michael Arrington walk in here today. More excited when I heard what he had to say on stage. Mike, welcome to CNBC Cryptotrader. Good to see you, my friend.
Good to see you.
So you made an announcement today on the stage.
Yeah.
Tell us a little bit about what you announced.
So I announced a new hedge fund. So I'm a venture capitalist. Before that, I founded a website called TechCrunch, which is technology news. And then I became a venture capitalist. I had 3 funds, and now I'm starting something new, a hedge fund, to be focused entirely on crypto, so cryptocurrencies and related assets, yeah. So it's denominated in XRP, which is a cryptocurrency, and it's the 3rd or 4th biggest, depending on how you calculate. And I think that you're going to see, you've seen some people dabble with Ether and stuff like that with small hedge funds, but I think this is the first large-scale hedge fund denominated in a cryptocurrency, and it makes a lot of sense. Like, it's just so much better than using any kind of fiat dollars, whatever.
But why XRP of all the cryptocurrencies that are out there?
Banks use XRP to transfer money, particularly cross-border, because it's super fast compared to SWIFT, and right. So it's a cryptocurrency that's specifically designed for large institutions to move money to a different institution in a different country, super fast, super cheap, particularly bypassing SWIFT. We're going to have LPs from all over the world, and we're going to be making investments in XRP. It is so much better than wiring money to an investment, sending them cryptocurrency. We're investing in crypto companies, so they're already set up to take crypto. They know what crypto is, so there's no educational curve. Like, it's almost like, why would anybody starting a crypto hedge fund do it in dollars? Like, that makes no sense. It doesn't make any sense at all.
You spoke on stage and you mentioned that you were still very bullish on ICOs, even though in the last couple of months ICOs haven't been that exciting.
They've been pretty exciting.
Well, the last couple of months have been a bit dull on the ICO market.
Some people lost some money. I mean, there's been some fraud and some bad stuff has happened. But look, I mean, it's like there's a reason why so much money is flowing into this. It's because it's a really efficient way to raise capital, and it makes a lot of sense. Now, personally, I think some companies are raising too much money. I think the valuations are a bit wonky, particularly because you're talking about some of these ICOs they're not actually buying any kind of equity in the company. You're just getting some indirect financial benefit. I think I want to see securitization, like securitized like ICO tokens, I think is really exciting. And as we see that, I think it's going to get really interesting.
That must be the next level. Now, you're a VC turned ICO fund guy.
Yeah.
Draw comparisons for me between the industries.
It's very similar.
Very similar.
When you make a VC investment, you invest day one, and then you pray, and you hope, and you hold off, and maybe you invest a little more, and 7 years later, you either write off the investment or something really good happens. So I invested in Uber in 2011, and it looks great, but we haven't actually sold any of the stock yet, so who knows, right? And we invested in Airbnb, it looks great. Well, with ICOs, of course, you get the tokens like right away, and then they're liquid right away. So you can choose to sell or keep them depending on what you want to do. So it's very similar to VC, but you have immediate liquidity, and that makes it so much better.
And so much more fun because...
Yeah, also, small investors can buy small amounts. So when Uber, invested, you can only invest hundreds of thousands of dollars or millions of dollars. Anybody can go on exchange and buy small amounts of these tokens and start investing, and they do.
And your fund, is it going to be an ICO-focused fund? Or
Partially. So there's been some ICO-focused funds. We have the flexibility to do it, and we will probably put 10-20% into ICOs, but the majority of the fund will be in traditional crypto assets, buy and hold, maybe some quant trading, but mostly buy and hold. Yeah.
And what's your competitive advantage? I mean, everyone that you speak to here today is starting a fund, running a fund, raising a fund.
If you have a hedge fund, you're trading crypto, their competitive advantage is your trading team, right? It doesn't matter what the only thing that matters is how well they trade.
Yeah.
And that'll be a big part of what we do. On the ICO front, access to deals is very important, and that is part of what we're going to do. I've been investing in ICOs this year. I've invested in, I think, 12 now, and they've done very well, and I've found that I have decent deal access, and I plan to exploit that to get access to what I consider the best deals are. Yeah.
Great, so your 3 favorite ICOs this year?
My absolute favorite is Orchid. It's going to make us a lot of money, but it's also doing good in the world. So they're creating a mechanism for people to bypass censorship, nation-state level censorship by allowing anybody to create a VPN. They were announced just recently, and we were the very first money into Orchid, and I think it's going to be have a profound impact on the good of the world. I don't know how bad things will get, but no matter what, if we just continue along right now with the level of fraud we have right now, we're going to see regulation in the U.S. You're seeing it all over the world already. People still look to the U.S. for leadership in this area. The SEC will make their move. It just has to happen.
They've got to make their move pretty soon. They've been threatening.
Yeah.
The problem is that if they make a move, it may become like a security, which may be very highly regulated, and that may kill the industry.
I mean, it's going to, whatever happens, happens. Like, we'll keep an eye on it, and we'll invest accordingly.
So, Mike, if people want to find out more about your fund, can you give us
it's
a web address?
ArringtonXRPcapital.com. So it's Arrington, ARRINGTON. XRP is Ripple. It's Ripple's currency, and then capital.com is the right way to do it.
There's so many new crypto funds, hedge funds, and investment funds popping up in the blockchain space. And the one characteristic they all have in common is the need for software to manage the valuations of their assets. Here at Consensus Invest, we're sitting down with Libra and the CEO and founder of Libra, Jake Benson, whose company does just this. So, Jake, nice to meet you. You guys have some big announcements at the conference. What's the big news?
So, number one, the biggest news is that we announced our Series A financing. So we raised $7.8 million, and we're just really excited to be able to use that money and put it to work to help this industry mature. So that's announcement number one. We've done our Series A, and that's a traditional financing too, by the way. That's equity financing. We're not doing a ICO or a token raise, so sorry, no Libra tokens for sale. But the second thing that we're announcing, we announced this morning, is that our new product, Libra Crypto Office, is here for all the crypto funds, crypto exchanges, and crypto market makers in the space. And this is accounting, audit, and tax software for the industry. It's not the sexiest thing, but like you said, it's the thing that every single fund needs. We're very specifically focused on the back and middle office processes of funds. Right now, everybody doing reporting and transaction tracking manually in Excel, and we've created what we think is the very first automated and scalable solution for these guys.
Yeah, so the accounting issue is an issue that I consider mission critical for the industry. There's currently no U.S. GAAP standards for digital currencies or digital assets, and the IRS taxes Bitcoin and virtual currency as property, which means you're subject to capital gains and losses. So what does Libra do to enable a technical solution to this issue?
Yeah, so while there's gray area, funds at a minimum need to have a best-in-class solution that they can rely upon. So even when regulation does change, they know that the solution is going to change along with it and quickly adopt new practices. But we actually use the proper accounting methodologies to treat every single transaction in crypto. So whether you're buying into crypto with fiat or even whether you're trading from one crypto asset to another, we do all the acquisition and disposal tracking. We can use different cost basis methodologies like FIFO, LIFO. We can even optimize to reduce your taxable liability. But from an accounting perspective, we do all the proper and accurate record keeping to make sure that all your transactions are properly accounted for. And yes, at the end of the day, for most people, that does mean that they realize a bunch of capital gains, but that's generally a good thing.
So you're here for Consensus?
Yeah, I just spoke on a panel.
Awesome. I'm Ran.
Hi, Ariana.
Ariana, what brings you to Consensus?
Well, I was just on a panel about the new buy side with a couple of other investors.
Cool, so you're a crypto investor. And what do you do in crypto?
Well, I invest in digital assets, so primarily publicly traded top market cap coins in a few areas that I think are especially interesting these days.
And when did you buy your first Bitcoin?
About 5 years ago.
What got you into it?
Well, I was really excited about, I think, the possibility of a network or a currency or a store of value that was not controlled by a single central government. I had just come back from Zimbabwe and seen the economic devastation that they'd gone through following, their rapid hyperinflation, and decided that, I stumbled upon the Bitcoin white paper and realized that that could be a real solution to that problem.
Cool, and now you're running a fund, or you're setting up a fund. Tell me a little bit about your investment philosophy in the fund.
Sure. Well, there's a few areas that I think are particularly interesting, primarily infrastructure and privacy. I think we're still a number of years away from mainstream adoption of decentralized networks by consumers, and so I think that there's going to be a number of pieces of the ecosystem that need to be built in order for things to really take off.
So you're talking about things like Monero and Zcash and...
So those would fall into actually the other area that I'm interested in, privacy. On the infrastructure side, I'm talking more about things that are, for example, solutions to the scalability issue, like Lightning Network or TrueBit, or even things that are, wallets or products and services that allow folks to store and custody their Bitcoin more securely. Bitcoin and other crypto assets.
Awesome. And so Bitcoin, happy birthday to Bitcoin. Bitcoin hits this $10,000 mark. Is it a significant mark at all? Should we care?
I try not to get too wrapped up in day-to-day price fluctuations because I think ultimately the fundamentals haven't changed, and I'm definitely not selling even at 10,000. So, I think it's significant, but not really. It doesn't cause me to do anything differently.
Other tokens or verticals that you're really excited about? So you mentioned privacy. Mm-hmm. You're obviously a big investor in Bitcoin. What other verticals are you looking at?
I think infrastructure is another big one. I'm very curious about basically any kind of network where there's a strong peer-to-peer network effects component, so businesses where the majority of the value is accrued from other participants in the network rather than any individual entity that's managing the issue or the project. But in general, I would say that we're probably still a number of years away from that. So while I'm looking at that, that's less of an active area of investment for me.
So when you're valuing tokens to put into your fund, what do you look at? I mean, there's no scientific formula to give you valuations. So what do you look at? That's
right. I think I look at a lot of different pieces. Things like transaction volume, where is it being used, is it becoming a platform, so are other people building things on top of it, how active and how engaged is the community, things like that.
Awesome. It's been such a pleasure riding this elevator with you, but I think we should get out now because...
Yeah, I think we've probably gone up and down a few times, so...
So here's the story. You get introduced to an exciting ICO. You think to yourself, this is like a once-in-a-lifetime opportunity. So what do? You take some Bitcoin and you put it into the ICO. And you wait. And you wait, and you wait. And in the time that you wait, the price of Bitcoin goes up. And when the ICO launches, it launches at the same price as you paid. It launches at the same price that they offered you in the ICO. And you've lost a whole lot of money in what they call opportunity cost. I've been complaining about this on Twitter for a long time, but Alex Sunnarborg summarized it beautifully today on the stage. Alex, let's talk about this problem that we're having in ICOs.
Absolutely. So like you said, there's this huge concept of opportunity cost and risk return across these different assets. So when you're looking at an ICO opportunity, you really need to think of it in terms of Bitcoin or Ether during that same time horizon. Arguably much less risk, and just the elements of illiquidity and ICOs only compound this sort of risk. So oftentimes for institutional investors now, they're offered discounts to eventual ICOs. So let's take an example of a 20% discount to an ICO that's going to happen in 6 months.
So you're getting a 20% additional risk premium because you're willing to ride it out for 6 months.
Exactly.
What happens in the 6 months?
So in the 6 months there, you have this huge time where basically you could be investing in the other assets like Bitcoin. In the past 6 months, Bitcoin's probably nearly doubled. So all of a sudden that 20% discount doesn't look quite so attractive. And on top of that, what really makes it worse is the fact that at that ICO, that's not even a given. That ICO could slide, it could get completely canceled, and after the ICO, there might not be any liquidity on exchanges at all. An exchange actually has to list this token for there to be large volume for you to be able to sell. So you might make this 20% discount for 6 months. You have your ICO that's at the same price as the you have your asset allocation at the same price as the ICO, and then at that point, Bitcoin's doubled, and you're sitting on something that only trades a few $100,000 a day, maybe with a couple $1 million position, and that's essentially not even worth the value. You can't sell it.
So there's two distinct problems in what you're saying. The one is that there's a premium that you need to pay for this risk that you're taking. That's the first one. And the second one is a liquidity problem.
Yeah.
So when you're investing in ICOs, you're actually fraught with risks. One, will the ICO actually happen? Two, when it happens, will it be liquid? And three, what will happen to the Bitcoin price in the time that the ICO happens?
Absolutely. And on top of that, there's even another risk in these pre-ICO deals. So it's something like Bitcoin or a live asset like even Ether or Monero or Zcash. This technology is live. This asset's already trading. There is a blockchain. On some of these pre-ICO deals, you have this added tech risk. Are they even going to figure out how to make it? They might come out and say, this protocol design was too hard, we didn't figure out how to do it, sorry, your SAFT is now worth nothing and we're not doing an ICO. So it's like liquidity, opportunity cost, comparative risk, the technology itself. These ICOs are just fraught with a lot of risk that makes them already trading proven assets just look a little more attractive than people might initially think.
So you're managing a fund or you're raising a fund. Does that mean that you're going to avoid ICOs completely in your fund?
Not at all. So I think there is opportunity across the entire space. We have had histories of extremely large returners like Ethereum return over 1,000x in 3 years, now an extremely liquid market. We do have some ICOs that end up rallying 5, 10x within a week or two of the ICO. That you can make substantial profits if you exit early. It's just you need to be extremely diligent. You need to really understand the liquidity of the investment you're making, and by all means, you really need to consider all investments. So we evaluate and we hold positions from Bitcoin to some of these more illiquid but live tokens to these pre-ICO SAFs. I would say, we look to invest in everything rather than a specific rule against ICOs. We just like to keep the illiquid part of our portfolio under like a third or a quarter of our total portfolio. So we'll only invest, a portion into these deals that have this added element of risk.
The ICO market is a very new market, and I think everyone's learning their way around. The issuers need to change what they do. And people like us who invest in ICOs need to adopt a really, really, really fine look at these ICOs before we invest.
Yeah, absolutely. People just need to be a lot more diligent and really selective. So, we probably say no to 90-95% of the ICO deals we look at, which ends up taking a lot of time. But just because the risk is so high, you need to be extra careful. The reward is also potentially there, but exactly, investors just need to be extremely diligent.
I'm going to put you on the spot now. Your favorite ICO that's happening at the moment?
At the moment, I would say we recently invested into QuantStamp, which is a sort of a smart contract auditing protocol, basically trying to find bugs on these public networks like Ethereum before they go live. So they just had an ICO. It's in this current state right now where it's only traded on decentralized exchanges. So the liquidity there hasn't really peaked as it's not on major exchanges, but I was a really big fan of what they're doing in general as a theme.
We're at Consensus Invest, and I'm sitting down with Jonathan Johnson. He's on the board of Overstock.com, and he's also the president of MEXC Ventures, which is the investment arm of Overstock. As you may know, Overstock.com was the first public company to accept Bitcoin for payments. And now, after many years of being involved in the crypto space, they have a fund that's involved in investing in companies above and beyond Overstock in the blockchain ecosystem. So Jonathan, you want to talk a little bit about Overstock, how you got involved in Bitcoin and crypto to begin with, and then we'll get into MEXC.
So back in late 2013, we started looking at Bitcoin and decided, it's a way to make it easier for our customers to buy stuff on our site. And we announced that sometime in the next 8 months, we would be accepting Bitcoin. We had a group of developers that came to us and said, why are we taking so long? And in that week in between Christmas and New Year's, they locked themselves in a room. And on January 9th, 2014, we became the first company to accept Bitcoin.
So how has has that changed and impacted Overstock as a company by just the simple action of accepting crypto?
We're in the retail business. We sell sofas and rugs and those kind of things. But when we started accepting crypto, we quickly understood that as cool as cryptocurrency was, it's the underlying blockchain technology that's so powerful. And so we set up a wholly owned subsidiary called MEXC Ventures, which invests in companies that are advancing blockchain technology. And we've made 9, soon to be 11 or 13 investments in different industries to try and push forward disruptive companies in the blockchain space.
So we've heard a lot about the difference between crypto, Bitcoin, digital assets, and then blockchain technology. So what exactly is the investment thesis behind MEXC, and how do you decide what types of companies you're going to make an investment in?
Sure, so we're looking at different industries. We love the capital markets. We think it's ripe for disruption, settlement, banking and payments. These areas we like voting and identity. So we've picked a certain number of industries to try and focus on. When companies come and pitch us, and we get many, many pitches a week, what we're looking for is, what's their business model? How good is their technology? Do they have the people that know how to sell? And most importantly, do they have somebody with industry expertise?
Yeah, absolutely. And so some of your companies are also looking at tokens, and some have actually been through an ICO and issued a token. However, you have not invested directly in tokens. So how is MEXC navigating through the ICO and token phenomenon?
Yeah, so to date, we've only made traditional venture capital equity investments. Some of our portfolio companies have completed ICOs or are in the middle of them. We think our biggest portfolio company, T0, is in a great spot with an SEC-approved exchange that will allow tokens to trade with SEC approval. And so, we see it as still an emerging area. There's a lot of uncertainty around whether tokens are securities or utilities. We think it's important that people play within the rules, and until those rules are a little bit more established, we're a little hesitant to invest in ICOs.
Yeah, understandably. Now, T0 is a pretty interesting company in that it also plays off of the parent company of Overstock.com. So what exactly is T0 doing to also support the efforts at Overstock?
So Overstock, kind of like Jonas Salk when he invented the polio vaccine, he couldn't get anyone to test it, so he injected it himself to prove that it worked. Overstock really believes in digital securities, and we issued a crypto-based Overstock preferred share about a year ago. And T0 was the exchange or the platform that it trades on. So today, if you want to purchase a blockchain-based security, you can buy OSTKP, our preferred share, and it trades on the blockchain. It settles the instant of the trade. T0 has been really helpful to its ultimate parent company, Overstock, in helping us prove that you can have digital securities that are crypto-based.
Really? Man. Oh man, you guys are filming, my bad.
So Jimmy, we're all here for the Consensus Invest, and all the talk is around Bitcoin, and particularly around a post-SegWit 2x Bitcoin. Where are we at?
We are currently split communities, basically. You have Bitcoin Cash, who are sort of using Bitcoin as a medium of exchange or to transfer money and stuff like that. And another part that's more concerned about using it as a store of value, or making sure that their wealth is not inflated or taxed away or something like that.
So Roger Ver had a very interesting week on Twitter because he was taken on Twitter, and I think he later apologized. Why is this thing around Bitcoin versus Bitcoin Cash? Surely by now we can get over it.
You would think so, but there's a lot of conflict in the community. A lot of people that don't like sort of have bitter feelings over what happened and how it happened. And Roger obviously doesn't like Bitcoin Cash being called Bcash and things like that. So those are all sort of parts of it, but it's hard to say.
Let's talk about the two schools of thought. So you got the crypto Keynesians on the one side and the crypto Austrians on the other side. What's the difference between the two schools of thought?
Yeah, so if you think of the block size limit, that's sort of like a hard speed limit on the amount of money that can go through Bitcoin. And for Keynesian sort of thought, they want a huge velocity of money, right? That way, that's what they think makes their coin valuable. For a crypto Austrian, it's being able to store it as a secure store of value. And that's what causes them to think that their coin has value. And the wonderful thing about crypto is that now we get to see, right? Like we get to see who's right, what does make it better.
So the Austrians want small blocks and the Keynesians want big blocks.
Well, Austrians want security and a good store of value. Keynesians want more money going through the system so that like more people can spend it and things like that.
What does Jimmy Song want?
I want store of value. I think that's been my investment thesis. There's been a lot of altcoins that have tried faster transaction stuff.
If Bitcoin is your store of value, what is your transactive coin?
I don't know if I need one. I think Visa and MasterCard are fine for that.
Okay, but Visa and MasterCard are going to be disrupted. Who's going to disrupt them? I know you're scared to say Bcash, and I want to get it out of you.
I don't know. It could be, but it's kind of bad for that because there's no easy refunds and things like that. So I don't know, maybe the technology catches up. At that point, it could be Bitcoin Cash. I'm open to that possibility.
Jimmy Song just said it could be Bitcoin Cash. Not even so long ago, I spoke to you like a month ago when Segwit 2X was cancelled. You said Bitcoin ain't going to 10,000. Now here we are standing in Times Square.
Well, my analysis changed, but at that time, I did say that 7,500 is a good time to take your profits, and we fell over 30% but the selling happened really, really quickly, and the rebound happened even quicker.
So Tide, I have to ask you this question. Every time I speak to you, tell me you're a Bitcoin man, but you're not a crypto man, or you're not a blockchain man, you're a Bitcoin man. Why are you not Ethereum man, for example? Or why are you not a more general crypto man?
Because I don't believe that those other projects have any kind of a sound footing. I have a fourfold problem with Ethereum. It's usually like a 4-hour discussion, but I'll make it quick. I think Ethereum has a major regulatory problem. Bitcoin is not a security, but I believe Ethereum is a security because 80% of Ethereum was created by a couple of guys in a room and handed out. So it has a huge regulatory problem, and I think the hammer is going to come down. I think it has a technological problem in that blockchain just cannot scale. The attempts to go to proof of stake, I do not believe are going to be successful. No one can even download the full Ethereum blockchain. Like technologically, I believe it's unstable. Also, even like conceptually, my problem with it is that no one needs decentralized smart contracts. There's no censorship going on in contracts. So why are you doing this inefficient decentralization? I think it's completely silly. And my final problem with Ethereum is the fact that why did they invent their own currency to be used on their own platform? If that was a good idea, we would all be using Amazon stock to buy things from Amazon. Like any one of those 4 things, I expected to destroy Ethereum by now, yet it's still with us. So, and all the other projects are not much better. They're always having one or all 4 of those issues.
What is Bitcoin Diamond?
So Bitcoin Diamond basically is another fork of Bitcoin where they split off from the original protocol. They want to improve some things and they're not happy with the original protocol, like Bitcoin Cash.
Who did this?
So we don't know. It's an anonymous project that only traded on one exchange in China called BINANCE. So unlike Bitcoin Cash and Bitcoin Gold, we don't even know who's behind it.
And what's the use case for Bitcoin Diamond?
We also don't know that, unlike the specifications of Bitcoin Cash and Bitcoin Gold, where you could say, okay, they have some advantages, some disadvantages over the original protocol. Bitcoin Diamond doesn't have that.
So let me get this straight. You've got a bunch of people who are anonymous telling you to send your money to Binance, which is a Chinese exchange, so to speak, and you're going to get this token or this split called Bitcoin Diamond. I mean, it sounds like a scam.
It definitely sounds like a scam, and I think this is so important for people to understand who just get into Bitcoin. You need to be very, very, very careful of what you're doing because you're putting your Bitcoins at risk.
You got me in New York, you've got alts on a run, and you've got the market cap at over 300 billion. There's so much to look forward to in 2018, my friends. Have a great festive season and trade well.
And I won't stop pushing, I can do it, I must get through this pain. I wrapping my mind over.
Cryptotrader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.